We're diving straight into Snapchat stock and their game-changing launch of creator subscriptions. I'll break down what it means for the stock, share my personal position of 15,000 shares, my outlook on where it's headed, and a killer strategy to get in right now. But before I dive in, all I ask is that you give this a like and subscribe if you want to hear more from me. But let's jump in. So Snap announced creator subscriptions yesterday, February 17th, with alpha testing starting February 23rd for select US creators. Now they're going to allow the creators to set their prices from $4.99 to $19.99 a month. And this allows you to unlock exclusive snaps and stories, priority replies, and ad-free viewing. It's built right into the app for Snap's 474 million daily active users, which continue to grow, and almost 1 billion monthly active users. This aims to deepen creator fan ties and hopefully rival Instagram and TikTok subs. So now what this means for the actual stock. So the stock's down 42% the past 3 months, and it needed something exactly like this. These creator subscriptions will diversify Snap's revenue beyond ads, which make up around 95% of the revenue right now. Q4 earnings of 2025 showed $1.72 billion in revenue, which grew 10% year over year, and had a full year revenue of $5.93 billion, up 11%. They also have their Snapchat Plus subscribers at 24 million right now, which grew 71% last year. And creator subs could add another 300 to 500 million annualized by 2027, boosting margins and, most importantly, average revenue per user. And the best part, there's not much risk to this. Yeah, it might be a slow rollout and can't compete with competition right away, but there are no real negatives. It can only create more revenue, and the early buzz around this is quite strong. And with Snap currently trading at 472, they're pretty much priced for failure. If we look at their forward PE, it's around 10, which is half that of their biggest competitor, Meta, which is sitting at 20 right now. And Snap has so much more to grow. Their potential is completely untapped. Users have continued to grow at around 5% a year, and I think those numbers will come in higher as they scale globally. So I hold 15,000 shares, current value of just under 71,000, and my average cost is just over 6, which I have collected premiums from different option strategies. So it's really not this high, it's probably more like 550, 560, but you get the point. So I've continued to buy over the last few months as it's trended down, and it's gotten stupid low. I don't think this stock's going to stay below $6 for much longer. I think we'll settle somewhere between $6 and $8 over the next 3 to 6 months, and analysts have an average price target of $8.15, which is 72% upside from here, with highs of 15. If they come out with good earnings Q1, this stock could be well above $10. We're looking at over 100% gains in less than 6 months. But I don't want you to be too risky. So I'm going to provide you with a strategy to enter now, which takes away risk, but gives you lots of upside in the short term. And that's called selling puts. So I use option strat, which gives a very nice visual. We're going to go and collect cash secured put, type in Snap, and I would just sell a $5 put a little over a month out, March 27th expiration. So essentially if the stock is below $5, you're going to buy in at an average price of $4.49, which is another 5% discount from here. If it does end above $5, well, you just made 11% in a month. This is an incredible opportunity right now. And if you want to check out more option strategies that take away risk, but can still provide great short-term results, and if you found value today, all I ask is that you give it a like and subscribe so I can see you in the next one.